Let's talk more about tech in light of yesterday's market sell-off. For insights on the mega caps and more, let's bring in Dom Rizzo, portfolio manager of the global tech fund at T. Rowe Price. Dom, thanks so much for joining us. Good morning.
Good morning. Thanks for having me, guys.
Yeah, I want to pick up where Dom and Becky just left off there with Nvidia. Calls for at least maybe some opportunities in terms of valuation. Do you think Nvidia is more attractive right now at this valuation, or do you think there's still some legitimate concerns out there about AI, DeepSeek, and lower price models?
Well, I really think Nvidia is quite attractive here, and there's a couple of reasons why. Well, let's take a look at the valuation first. The stock is trading in line with the SOX index now, and is trading at only a slight premium to the S&P 500. If you look at it historically, that's historically where the stock's bottomed on a valuation perspective. But more importantly, we have improving fundamentals from here. Gross margins for Nvidia should probably bottom in the April or the June quarter and improve to that mid 70% level as we head throughout the rest of the year. And then if you look at the supply chain, things are actually looking really positive for Nvidia. So, Han Hai reported its February numbers this morning. They're the biggest, partner for Nvidia, and the February numbers were up 56% year over year in terms of revenue. And then if you look at the fundamentals of other parts of the supply chain, memory prices are starting to increase for both DRAM and NAND, both up mid-single digits off the bottom. And then finally, probably most importantly, if you look at Nvidia's revenue growth from here, we're going to just keep seeing sequential acceleration. So I kind of put it together, and I like the setup of the stock.
Yeah, and we had that raid in Singapore where it turns out that the chips being sold to Singapore were finding their way in China. Do you think the administration here and what they could do with Nvidia further restricting chips, even perhaps the cheaper chips that they're allowed to sell to China right now, should that be a concern for investors at all?
Well, looking at the fundamentals, what's happened since DeepSeek, if you look what's actually happened since DeepSeek, is Nvidia demand has gone through the roof, both in China and in the U.S., right? So if you look at the supply chain, H20s, those cheaper chips you were referencing, the demand for that has really surged since DeepSeek. And then if you look at what's happening in the U.S., Hopper pricing and all the clouds has gone up. So Nvidia is clearly the biggest negotiating leverage tool that Donald Trump and the administration have with China. It's one of a few, and I think it'll probably be part of a grander bargain in terms of the China deal.
Dom, when you look at the companies that are doing all of this spending, and obviously the customers of Nvidia, like the cloud platforms, really interesting divergence in terms of how the market is treating them. You have Alphabet right now trading at a 10% discount to the S&P. Rarely seen that through history. Meta, on the other hand, has seemed like it's gotten it all figured out. Are there opportunities you see in those divergences, or how do you think about that group in general?
The issue with all the hyperscalers right now is that CapEx intensity has to continue to increase, right? And frankly speaking, Nvidia is going to capture a lot of that economic value from that capital intensity increasing. I think the reason Alphabet struggled so much is really a function of its search business more than anything else, right? Just think about your personal day-to-day experience. How much more are you using ChatGPT and Perplexity relative to Google search? My gut is probably a lot. And so that search business is so big. And if you look last quarter, that grew 12% year over year. I'm not sure that search business can continue growing at 12%. So yes, I like YouTube. Yes, I like the cloud business, but it's really the search business that is under attack, which has historically been one of the best businesses of all time, frankly. And if you look at Microsoft and Amazon, all three of the hyperscalers were capacity constrained this quarter. They actually would have sold more in their cloud business if they had more chips from Nvidia. And I think that's partially the Blackwell delay, which should improve in Q1. And so of all those three, I personally think Amazon's the most attractive. We have a few different moving pieces for Amazon, but most importantly, I think operating margins continue to improve throughout the year for Amazon.